With the management of Syrma SGS, we have the CEO, Mr. Satyendra Singh, joining us on the show. And Mr. Singh, morning. Thanks for your time today. Let's talk about your guidance and the growth outlook. You've guided for 30 to 35% revenue growth for FY26 in a market where EMS demand is accelerating. Which verticals? Could it be auto, industrial, healthcare, or exports? Do you see driving this guidance? And what gives you the confidence on sustainability or visibility beyond FY26?
We are having customers across multiple segments. As a strategy, we are very focused on industrial customers, which is a significant part of our revenue. Then automotive. We have relationship with all the automotive companies in the country, as well as we are supplying to some of the global automotive giants exporting out of India. We have a pretty good portfolio on healthcare as well, which is we see growing as in healthcare electronics. And fourth is railways, which is a niche play. And though it's a small part of our business as of today, but we are taking actions to ensure that there is a serious growth over there. And that's where we took, I think you must have seen about 2 weeks ago, we announced a joint venture with a European player called Elemaster. So we are taking some of these actions and we see solid growth from the market. When we talk to our customers, they are very optimistic about the growth in the market. So all in all, put together, like we have guided the market for about 5,000 crore revenue for this year, which is about 30 to 35% growth from last year. We are pretty confident on that.
All right, Mr. Singh, morning. This is Shrishti also joining in. But with Andhra Pradesh approving the land and the state support for your PCB project, can you share the next milestone for that? Because that is indeed one of the very interesting business that you have recently ventured into. What will be the subsidy disbursal, the trial production and the customer onboarding, and whether the FY27 commissioning timeline is still realistic?
We have partnered with a very good Korean company called Singh Electronics. They are having the relevant technologies. They are partnering with us and working with us to set up the processes, working with us to commission the plants, and making sure that everything is kept ready as per plan. What we are looking at, I think you might have seen the announcement which we did today. So we have got the permission from the government of Andhra. We have about 26 acres of land. And in this plant, we would be doing single layer and multi-layer PCBs to start with. And later on, we will go over to HDI and flex PCBs. And we would also look at copper laminates, which is the raw material for PCB later on. Details are being worked out. At this point, we are looking at commissioning of the plant in next financial year. It will be towards Q3 of next financial year.
Right. You've also now entered a joint venture with Elemaster Italy for highly reliability electronics as well, right? How does this complement your existing EMS and PCB plans? And will it open new export geographies, or is it more about a technology depth and higher value customers?
Oh, absolutely. So like I was talking about the focus for us, and one of the things I mentioned to you was the railways. Elemaster is very strong in the railways business. They have very strong relationships with some of the top railway customers in Europe. And these customers have significant businesses in India, and they're looking, and given the infrastructure push from the government of India, wherein they're looking at building transportation systems across the country, whether it's air or road or railways. Railways is poised for a significant growth. And with this partnership, we believe that we will be able to participate in the growth which we will see next years to come in India. In addition to that, I think they will also bring in certain customer relationships with the customers who are outside the railways. So we are talking about certain industrial customers as well as certain medical customers. And a good part is that all three segments are our priority segments. So while railways is one of the things which we have a small business now and we are looking to grow, but it will also augment our already strong position in industrial as well as medical electronics.
Right. Okay. Mr. Singh, let's talk about your exports. They grew nearly 30% year on year, and you've guided over 1,000 crore export revenue in FY26 as well. Now, with tariff uncertainty still lingering, are customers accelerating outsourcing to India, and how hedged is your order book against any near-term trade shocks?
So first of all, I think the exposure of Syrma SGS to current tariff uncertainties is minimal. Secondly, when we talk to our customers, the customers who we are doing business with, they are pretty optimistic about the business they are doing with us. They love our capability. They love the fact that we are able to support them in the businesses they require us to support. They love the possibility of growing the business and relationship in future. And that means it's kind of, we are working with them and to ensure that the business continues. There are certain new discussions which are happening particularly in America, and those are also ongoing. So we do not see any significant impact from that side. But remember, we export to about 20 countries, US, Mexico, and Germany being top three, and then there are 17, 18 more countries where we export. So all of that business is continuing, and we have quite good visibility into the business, which is about 1,000 crore for this year that we have guided for.
All right, good to note that. But Mr. Singh, you have reiterated the 8.5% to 9% EBITDA margin guidance for FY26. What are the key levers to sustain or expand margins, especially as exports and the new EMS, PCB, JVs are likely to scale up? And could we see double-digit margins by FY27?
So actually, I would frankly stay with our stated position, which is 8.5% to 9% EBITDA at this point in time. That's what we have all guided for, and we are doing everything we can to ensure that we meet that, or we will try to do everything to, be within that range. And then coming to certain things, what are we doing to ensure we sustain it? I think first, the sectoral focus on certain customers. We are going deep into the relationships. We are having discussions with the customers around the design capabilities. So there are customers who are requiring us to, hey, can you look at the design we have? Can we improve this? Can you do the design of a new product? So we have lots of those conversations ongoing with some of our customers, wherein the value add from our side would be higher. And we bring a higher value not only to the customer, being their partner, but also to ourselves as Syrma SGS. And then I talked about the focus on the joint venture with Elemaster. So these few actions, which I'm in a position to share with you now, would help us ensure that we are meeting our guidance or trying to exceed that.
Right. And how much incremental benefit do you expect from PLI schemes in FY26 to 27? And importantly, how sustainable is the revenue margin profile once those incentives taper off?
We are investing in technology. That means right manufacturing technology. We got state-of-art machines. Frankly, about half of our manufacturing capacity has been invested in the last 2 years. And that means at least half of my capacity is capable of manufacturing anything that's getting designed anywhere in the world. So that's on the capability and on infrastructure side, as in production infrastructure. We are investing continuously on IT systems to make sure that we have the latest, greatest IT systems, wherein we are able to monitor and take actions on the production processes in advance, so that we are able to produce very high quality goods and supply to the customer when they need. Third thing on the capabilities around people. So we continue to invest on the people, and we are bringing industry experts wherever needed, and also augmenting the capability of our own people who we have had and who have, frankly, I'm thankful to each one of them who have brought the company to the level we are, which is almost 9,000 people working across our 15 factories. So capability is one, and second thing is scale. So which kind of plays in very closely with the capability. As you invest in the capability, you are growing the business. As you grow the business and you build the scale, you are able to invest into the capability. So they play together. So we are focused on scale, making sure that we build the scale in the right segments, which I already spoke to you about. And third thing is supply chain. I think we are working with our supply chain partners. Of course, like we are investing in our own PCB plant, but beyond that, we have strategic suppliers who we are working very closely with, helping them see our perspective.
Okay, Mr. Singh, appreciate that outlook, and thanks so much for joining us and speaking to us today. So that was the management of Syrma SGS. They've maintained their consumer guidance between 30 and 35%, so sounding optimistic over there. But let's shift focus from equities and talk about commodities. And Ashesha is joining us with a quick roundup of which commodities are buzzing and what's happening on